With mortgage rates at 6.52%, you'll need to budget thousands more for a $430,000 home, potentially adding over $12,000 to your annual mortgage payments. This video is designed to help first-time home buyers understand the impact of rising mortgage rates on their home buying budget. You will learn how to calculate your mortgage payments with rising interest rates, navigate the current housing market, and develop strategies for mortgage planning. Specifically, we will cover how to use a mortgage calculator, the effects of a 6.52% interest rate on your monthly mortgage payments, and tips for home financing in 2026. What are mortgage rates? Mortgage rates, also known as interest rates, are the percentage of your loan amount that you pay as interest to the lender over the life of the loan. For example, if you borrow $430,000 at a 6.52% interest rate, you will pay approximately $27,916 in interest over the first year, which is a significant increase from the $18,333 you would have paid at a 4% interest rate. How do rising mortgage rates affect my budget? Rising mortgage rates can significantly impact your home buying budget. With a 6.52% interest rate, your monthly mortgage payment for a $430,000 home could be over $2,700, compared to around $2,000 at a 4% interest rate. This means you'll need to budget an additional $700 per month, or $8,400 per year, to afford the same home. How can I calculate my mortgage payments? To calculate your mortgage payments, you can use a mortgage calculator, which takes into account the loan amount, interest rate, and loan term. For example, using a mortgage calculator, we can see that a $430,000 loan at 6.52% interest over 30 years would result in a monthly payment of $2,734. You can adjust the interest rate and loan term to see how different scenarios affect your monthly payment. What's the impact of a 6.52% interest rate on my mortgage payments? A 6.52% interest rate can significantly increase your monthly mortgage payments. Using the example above, we can see that the monthly payment would be $2,734, which is $734 more than the $2,000 payment at a 4% interest rate. This represents a 36.7% increase in monthly payments, which can be challenging for many home buyers to afford. How can I navigate the current housing market? To navigate the current housing market, it's essential to stay informed about real estate news and trends. You can work with a real estate agent to find homes within your budget and negotiate the best possible price. Additionally, you can consider factors like the home's location, size, and condition to determine its value and whether it's a good investment. What are some strategies for mortgage planning? Some strategies for mortgage planning include using a mortgage calculator to determine your monthly payments, considering factors like credit score and debt-to-income ratio, and exploring different loan options like fixed-rate or adjustable-rate mortgages. You can also work with a financial advisor to develop a comprehensive plan for your home buying budget and long-term financial goals. Key takeaways. In conclusion, rising mortgage rates can significantly impact your home buying budget, and it's essential to understand how to calculate your mortgage payments and navigate the current housing market. By using a mortgage calculator, considering different loan options, and developing a comprehensive plan for your home buying budget, you can make informed decisions and achieve your goal of becoming a homeowner in 2026. If you're ready to start planning your home buying budget and navigating the current housing market, click the link in our description to download our free mortgage calculator and get started today. Don't forget to subscribe to our channel for more first home buyer tips and strategies for mortgage planning.